Yeah, I've got two questions. The first one, I think, is a comment about what you're trying to do here in terms of value add. Instead of being a landlord that lets properties run down and become a slum landlord. So I think that says a lot about the ethics that you have behind your company. And the question I have, you showed us maybe some of your stars in the property. Do you have any that didn't work out so well?
Yeah, which ones would be the worst ones? What do you think, Wayman?
Well, I'll tell you, our worst case scenario, because it still sits on our books. Back in, and you learn from your mistakes. We focus strictly on cash flowing investments now. When we started off back in the early days, we had mortgages and real estate, because we started off with some commercial mortgages. One of the commercial mortgages was for a land development deal that looked like it was going to be pre-sold and was going to make good money and could be a good investment for us. That was 2007. The market turned down. It was in a small market. I talked about not being involved in small markets anymore. Just outside of Red Deer, we foreclosed on the property, took over the asset, wrote down the mortgage, and are waiting for the market to recover, and are actually working to find a developer to move it forward now. How many years later? 6 or 7 years?
6 or 7 years later.
And we've written that property down. So even in our returns of 10% a year, we've taken that property that had a value of $8 million down to $3.5 million. So that's our dirty laundry. That's our worst case story.
Yeah, and I think at the end of the day, when Wayman mentioned, partner capital, put the partners within Nicola Wealth Management and also Nicola-Crosby. So collectively, we have $20 million of our own money in these pools. At the end of the day, it matters, as Wayman said, that we're taking care of that money, and all client money then becomes treated the same. It's just, it's two pools, but basically treated the same between the two pools. So we will constantly look at every asset and ask ourselves, if we had to do it all over again today, would we still want this asset? And if the answer is no, subject to only issues related to transaction costs of selling, we will move on from that asset and look to find something else that we feel more strongly about. And we will constantly do that, for an indefinite period of time. We'll always be looking at assets that no longer fit what we're doing, because their time is over.
One additional comment on that. One of the things that is a benefit to how we've structured our portfolio is that we market to market all of our assets every quarter. We create a net asset value each quarter. We appraise our properties annually by third-party professional appraisals. We stagger that, so we appraise 25% of the portfolio each quarter. So we're watching, we're benefiting, if the market's going up or going down. We haven't got all the properties appraised at one point in time. But by appraising them 25% each quarter, and I've forgotten where it was I was going with that.
No, well, basically, it's sort of like there's no sandbagging involved here. So at the end of it, we've already said, if a property's going, like you saw that Wayman gave you some numbers, a particular property was bought for, say, $20 million and maybe now is appraised at $26 million. When we make the decision, do we want to stay? What we're really saying is, for $26 million, do we want to stay?
That's right.
Not for the $20 million we paid, because at $26 million, we have a pretty good idea we could get. So the question would be on that asset, if we had that $26 million of cash, is there an asset that we would rather own than the one we've got?
Yeah.
And if the answer is yes, we make a change.
Thank you. That's why you're a good partner.
Thanks, Wayman. No problem.
A lot of us get emotionally caught up in maybe a stock that we bought a couple of years ago at a certain price. And in our minds, we're hanging on and we're waiting for that stock to come back to that price. But it is what it is today. The value that it's at, it's where it's at. And you need to ask yourself, if I had this lower value, and that's what I have, would I buy that same stock today with this money? And if the answer is no, it's time to move on.